pattern, some candlestick pattern. I mentioned the hammer candlestick, the inverted hammer candlestick, shooting star candlestick, the hanging man candlestick, the bullish and bearish engulfing candlestick, and the piercing line candlestick, Marubozu candlestick. Also, I mentioned something about the doji candlestick. So today we want to talk about support and resistance. Support and resistance. Okay. So when we are talking about support and resistance represent the key junctures where the forces of supply and demand meet. The key juncture where the forces of supply and demand meet. In the financial market, prices are driven by excess of supply, which is down, and demand, which is up. So supply is synonymous with bearish, while bears and selling, okay. So demand is synonymous with bullish, which is bulls and buying. So if you see someone saying I'm buying, meaning that that person is bullish. If you see someone saying I'm selling, meaning that that person is bearish. So as demand increase, price advance at supply, as supply increase, price decline. So when supply and demand are equal, price moves sideways as bull and bears slug it out for control. So today I want to discuss only on support and resistance. There's no need for me to say a little more, say many things about support and resistance. Let's go to the chart. Let's do some analysis. Let me show you some different ways to draw support and resistance, some different ways to trade support and resistance. Okay. When we are talking about support and resistance, is a place whereby the market reach and reverse. Okay, the resistance is here. Look at the chart now. Look at the old chart. This is 1 minute candlestick chart. Okay, look at the old chart. So let's assume we want to place our trade based on support and resistance. You mark this at the resistance. Okay, say this is a resistance, you make it green, sorry, you make it red. Okay, and where is the next resistance? You begin to mark all the peak reversal points. Next resistance, you begin to mark all the peak reversal points. Well, I'm not saying it's not good, but most this is how I usually trade support and resistance when I start uh trading binary option or forex. This is how I started. I started to mark all the peak, and so that I should be able to draw my resistance. Now let's draw the support. Okay, so you begin to mark everything on your chart. Okay, so you see that all this red is our resistance, while the green is the support. Okay, so now let's assume the market reach resistance. We have already drawn the resistance somewhere here. Then the price reach resistance, the seller entered. You see the green which I have drawn here. Actually, it was a support here. So when the price reach, they touch the green, the market reversed to the upside. But this time there wasn't any reversal. Okay, if you observe what happened here, there's a market gap and shift. Okay, there's something I usually call gap and shift, because sometimes when the market is moving up, moving sorry, when the market is moving down, it start to move, it start to approach the resistance. Sometimes the market will gap to break the resistance. Same thing as support. If the market is moving down to break support, sometimes the market will gap just to fake move the support and resistance. Okay, so this is how you trade as a beginner. This is how you trade support and resistance. But we don't need all this on your chart because it's somehow not uh, perfect for you to trade like this. So many resistance, so many support, so many resistance, so many support. Now, if you want to trade support and resistance, always observe what has happened on the left side. Look here, we have this rejection because when the price decided to go down, when the price decided to go down, there was a huge rejection from buyers, which means that this is a level where the buyers actually enter the market. So that is our support. Buyers enter at the support, sellers enter at the resistance. So that is our support. Now trace it to the right side. Okay, as you can see, there was a breakout. This breakout indicate that sellers have already break the support level. So when sellers break the support level, the sellers become exhausted, become weak, then the market start reversing. Look at this candle here, the candle that formed before the breakout. Also, we have rejection here. Rejection indicating that some buyers at this area. Let's mark it out. There are some buyers at this area. Then also, when the buyers enter from this level, sellers also form a red candle, which indicate that from here to here is the buyers, is the sellers entry point. This is where buyers entered, which means, okay, let me explain very well. Look at this point here. This point usually is a green candle. It's usually a green candle. Because of this rejection, it is a green candle. So when sellers reject them, when buyers reject them, the candle close here. But look at this gap. This gap also indicates that there are some few buyers left to enter the market. Then sellers push the price down from this level. You can see this red candle. Sellers push the price down. So which indicate that from here to here is where the buyers actually enter. So which means that from this point to this high is an area which we can expect some seller's entry. Once the buyers entered inside this area, we are expecting a rejection and there is simply a reversal. So that is how I draw it. Now you see the candle have already break the level. Let's check another similar level here. Okay, check this one out. Look on the left side, we have a rejection point here, which means that from here to here, the buyers enter the market. Now look on the right side, you see that there's also a rejection before the price reached this level, which indicate that from here, this rejection point to this high is where the buyers actually enter the market. This is what I mean. This rejection is from buyers, right? So which means that buyers entered, reject the price, then close here. Then another buyers also entered. You can draw, I can make it two candlestick. Also entered, then reach this level. So from this level is where the sellers actually entered. It's where the sellers actually entered, then push the price down. So which means that from here to here is where we expect some sellers entries, like the sellers area. So which means that anytime the price retrace back to the level, we must have a rejection or a reversal. So let's check it out. You can see rejections. Okay, then you can see rejection, the shooting star candle. You can see rejections, seller's entry. You can see the candle close inside, seller's entry. Okay, so that is how you trade support and resistance the advanced way. Sometimes when I see this kind of trade, I usually enter, put all my money in it. Okay, because I know that this is what the market is telling me to do. You can see a very strong sellers movement. Okay, but if you check very well without even analyzing any of this thing here, that is why you always see that the market sometimes it reach level and doesn't reverse. Sometimes it reach the level and still reverse. But in this case, look at the area here. We have this rejection. This rejection tells us that it is from sellers. So if we don't know how to draw the level, how can we know that this rejection is from sellers? Sometimes we make mistake by placing the line here and they place the line here. Okay, saying that okay, this is where the sellers entered. Okay, you can trade like this, you can draw your resistance like this, but if you don't analyze what has happened on the left side, you won't be able to get this kind of information here, which means that anytime the price reach the level, the market must reject or reverse. Let's check some more example. Let's check euro jpy. Okay, so let's go to the left side. Okay, so now check this one out. Look at this level here. This point is where the buyers actually enter the market. So trace it to the left side. On the left side, what are we having? We're having some rejection here. We're having some rejection here. So I'm going to shift the line to this. Then also we have rejection here. So I'm going to double the line somewhere like this. Okay. So also if you check on the left side, you will see that there's a level here. Sorry. You see that there's a level here. There's a rejection here that indicates this is a buyer's area. But according to the price action here, buyers enter from this level, also close here. Then another buyers also entered again, then stopped here. So this is the level the sellers actually enter the market. So let's go further. What we need is the market to leave the two lines, go down a little bit, make a retracement. Once the price make a retracement to that this mean between these two zones, there must be a rejection or a reversal. Check it out. Okay, now the market has leave the lines, leave the two lines. What we need is the market to make a retracement. Okay, first the market retrace, got the rejections, and sellers entered. You can see what next. Okay, you see that there's also a rejection from that level and sellers entered. This candlestick is a reversal sign, so sellers entered very strongly. Now we have a strong bullish movement which violates the level. You can see it got rejection inside the zone, but there wasn't any reversal because of this strong bullish movement. So you can do not anticipate the movement, just leave it like that. So that is how you trade the pattern. Now let's check on the left side to draw support. Look at this high. This high indicates that there are some sellers around this area. then went down. Let's go to the left side, look for a trend shift, a price shift and gap. Price shift and gap. Okay, look at the price shift here, then it gap down. So from here, what do we have here? Some see this rejection from seller's entry, rejection, sellers entered, then from here buyers entered. Okay, buyers entered to this level, or let's say to this level. So which means that from this high to this low, the two lines is where we have our support area. So let's check it. Let's see what the market will do. Okay, sellers is coming down almost. Okay, the market has not reached the level yet. So as the market is going up here, let's see on the left side if you can anticipate the movement. Well, it's too far. We can't do anything here. So don't trade like that. Don't trade far trend, far trade. Now they said don't trade if you are able to, if you don't see any level on the left side to draw. Do not go to the left side. Okay, just make sure that everything you want to draw is so close to the current price movement. So that is the first way to draw support and resistance. I'm going to show you another way, but let me give you one more example. Euro GBP. Okay, Euro GBP. Let's check it out. So here we have a level. We have a level. Then on the left side, we're having these rejections, which indicate that buyers decided to enter the market, then sellers enter the market. So I'm going to use the double lines. Okay, from this low to this high, that is where sellers entered. So which means that that is where we expect the seller's entry. First attempt, we have a rejection, sellers entered. Let's see second attempt. Second attempt, we have a doji, no sign of sellers. So buyers entered. Now the market also make it as a support level. So which means that we can also draw a support from there. Okay, so remember I'm using these two lines where the sellers actually enter the market and from where the buyers actually fill the whole area like a bullish engulfing. So from here to here is where sellers entered, then from here to here is where buyers entered. So which indicates if the market decided to drop, I'm expecting a bullish candle. So let's check it out. Let's wait for the price to drop. Okay, so that is the first way to draw support and resistance. Second one is this. Second one is if you have a bullish movement, if you have a bullish movement, then the market gap down and form a bullish movement. So from the gap here to this low is where we have our levels, which indicate that if price decided to go down, we have a reversal. I think the market has, okay, here we have the sellers entered very strongly, and okay, there's a rejections. I think I expect the buyers to enter here, but the sellers are very strong at, okay, I expect the buyers to enter. So what we need to look for is look for a candle that gap. Look for a candle that gap. Um, Where's a candle gap? It's so much. You can you look for a candle that gap on OTC market. It's not much on the real market here. I don't know why. Okay, see the buyers entered. Buyers entered, but we are looking for. Okay, yes, we have this level here, which means that there's a hidden resistance here. For the market to gap, for the market to gap to this level, it means that there's a hidden resistance. The resistance make the price to drop a little bit, but the gap indicate that sellers have already entered the market, but buyers break the level. So that gap is where we can expect some sellers entry. That gap is where we can expect some sellers entry. And let's see what is going to happen to this candle. Okay, and this one also the market gap. The market is not respecting the gap. What is going on? To be better if the OTC market resumes so that I'll explain more. I don't know why. Let's see GBP USD. Okay, GBP USD according to the first trade I said on support and resistance, I think I should expect some sellers entry. I can even make it here because we still have some this gap here, this space. The space that was here is still some buyers entry. Okay, but sellers entered, sellers fill the gap. So I can expect at least one more bearish candle here. Okay, here we have a rejection from sellers. We have a rejection from a huge rejection from sellers. Sorry, this is the level I'm talking about. Okay, here we have a tiny green candle. Buyers become weak, sellers entered. Here also candle closing side, but sellers still a sellers area. That's why the price dropped. And here we have a candle reject, a huge rejection from sellers, but the buyers has to fill the gap or must enter the level or the zone before we actually expect sellers entry. You can see even the candle itself is a reversal sign. Now, one thing you should note that is that this candle, this type of candlestick indicates a breakout, indicate a false breakout. Okay, a breakout from here, a breakout from this high because we are having some resistance here, minor resistance here. Then this candle break the level, had this huge rejection, create the high. Then we have another candle here, exhausted, a bullish candle exhausted, indicating the buyers are weak. So that indicates here a false breakout. So a false breakout usually means once the price break a resistance or a support, it means the market is going to reverse at least for 1 minute or 2 or 3 minutes. But in this case, it seemed to be that sellers actually entered for 1 minute after They have this candle breakout, the market gap, then form a hanging man. Before we know, we have a seller's candle here. But the actual candle I'm talking about is not yet formed here. So let me tell you one thing about this support and resistance. Okay. Um, you might want to apply the same trading skill, how to draw support and resistance. You might want to apply the same trading skill on your chart, but you are not getting it. One thing I should let you know is that not all the time strategy or your trading skill always work. Okay, not all the time it will work. Sometimes it will fail, sometimes it will work perfectly. But at least it cannot fail you all the time. It can't fail you all the time. Once you draw the level like this, you and then wait for the price to touch the level with a rejection, then execute the trade. You can see this candle, once the sellers touch, the market only reverse. But this one, it has to close inside before buyers entered. Okay, it has to close inside before buyers entered. And this one break, but still buyers entered. But in some cases, the market will just close or leave the level and continue without even okay. Look at this one now. We have a level on the left side. This level indicate that once the price reach this point, it's supposed to reverse, but it failed. It failed means that there are some strong selling pressure. There are some strong selling pressure still decided to push the price down. The strong selling pressure is what we are looking for. Okay, the strong selling pressure is what we are looking for. So if the buyers are supposed to enter from this level, then market close here. Okay, we expect the price to continue. We are expecting the buyers to go more up, but it failed to go more up. But what happened? From that level is where the sellers actually enter the market. The rejection high, the sellers push the price down. Okay, sellers push the price down all the way to this level. So if you look at it very well, it seems to be that the sellers engulf the whole body of the bullish candle, which indicate that anytime the price retrace back to that level, which the sellers has owned, we are expecting the market to go down. But if the market has gone down and play a long, very strong downtrend after the first attempt, then the second attempt we start seeing a bullish movement toward the level. Sometimes the market will reverse, sometimes it will not reverse. It will still continue. It will still continue just to make sure that they become exhausted before they reverse. Sometimes it will continue and break the level. Okay, then if the next candle is weak, it might now actually reverse. So the next candle that weak here, it indicates that the sellers now transfer or the sellers now move from here to this level here. Let me show you example. Look on the left side here. We're having some resistance level. We're having some resistance level. This is where the sellers actually entered the market. The market, then the price went down. But when the price came back up from this point, the buyers start pushing the price up, pushed the price up to this level, and sellers rejected them, which means that the sellers that are here are now here. So they are able to move from here to here. That is why the market went down. But if you observe closely, if the market reach this area, the first sellers area, it might likely to reverse. But the market must not exit this high. If the market is able to pass or cross this high, it indicates the market is bullish. The buyers will keep pushing the price up. But if the market did not break, if the market did not break this high or maybe a little bit above this high, you are expecting the sellers to still go more down. That is means that from here, from this high to this high is actually the sellers area. That is why we have this sellers movement. From this high to this high is sellers area. That is why we have this sellers movement after this candlestick. Okay, very strong sellers movement, which means that sometimes the market now revisit the level. We can expect some rejection, some reversal, something like that. Okay, so that is what the market usually does so many times whenever you are trading. Always pay attention to what the market is telling you. If you draw a level, don't just think the market will reverse at the level. Observe the level. Okay, there are so many gap, the gap level which I want to draw. Okay, check this one out. We have this level here, seller center, the market also gap here. So as the market gap from here to here. So what do we have here? From here to here, the price went down. So when the buyers decided to revisit the level again, we have a huge rejection. The sellers entered. So which indicate that where the sellers entered is what we call sellers strong sellers area. Okay, look at this movement, strong sellers movement. This strong sellers movement happened to begin from here. So that's why we always call it strong sellers area. So from strong sellers area, if the market rejects or close or touch the zone, the area, we must have a rejection. Also, we have this sellers movement. The movement here is not as strong as this movement. This movement here indicate that there are some strong sellers here, so we call it a strong sellers area. So once price touch the level, it will reject. But the next touch is not going to be strong. Now, when you can see that now you see that the buyers now violate the level. It become a buyers area, but the buyers are not strong. You can see the buyers are not strong. Though buyers break the level, but when the price touch the zone, the buyers here are not strong. So that is why, though we have a rejection to indicate the buyers are still active, but here we have rejection candle close inside but no strong buyers until we have a weak candle before buyers enter. So once we have a weak candle before we expect the buyer's entry. So the difference between is that here we have a strong seller's entry, which means strong seller's area. But if the buyers reach inside the zone, violate the zone or violate the area, it's not going to reverse. But here, after this rejection, we can see the market reverse to the upside, but it's not as strong as this previous sellers movement. So that is why we don't call it strong buyers area. It's a buyers area, but it's not strong unless the sellers become weak before we can expect some buyer's entry. So here sellers become weak, that is why we expect buyer's entry. Now we can see this is what we call buyers, strong buyers movement. Now let's look for the area where the buyers actually entered very strongly. The buyers entered here. I'm not going to draw area from here. I'm going to check on the left side to draw it. Okay, so that I will not make any mistake. What is going on? Okay, on the left side we have this multiple rejection which indicate there are some buyers entry here. Then we have this breakout. The market also creates a resistance which indicate there are some sellers entry here. So until we find any buyers, you can see once the market break it and return back to the level, we have a huge rejection which indicate there are some buyers entry here. So when the price reach the level, we have multiple rejection. You can see the first attempt here. The first attempt rejection, but no buyer's entry until sellers become weak because the buyers that entered here is not strong. So until sellers become weak, before we expect buyer's entry. Now we have a strong buyer's entry. So which means that that is now the buyer's area. Okay. So the second attempt, let's see. If the second attempt the candle reject from the level, buyers will enter immediately. Okay. The candle reject from the level, but buyers supposed to enter, but you can see there was a gap. Assuming there wasn't any gap, buyers will enter immediately. But because of the gap, sellers have to enter 1 more minute, then the price enter. So here again, we can see from that level is where the buyers enter very strongly. So this is how you trade support and resistance in respect of strong buyers and strong sellers movement. I think someone want to join the meeting. So this what I'm teaching you now about support and resistance or buyers and sellers area is so much advanced that you might seem to be confused. But if you are struggling to learn about support and resistance the simplest way, maybe you can able to understand this one. But trust me, the first support and resistance that I show you guys how to draw support and resistance, if you draw your support and resistance that way, you'll be able to make it in your trading. Okay. Um, let's check another example. See this movement, strong buyers movement. Okay. On the left side here, we have a few buyers entry here. The buyers are not healthy. Okay. And here we have, okay, here we have a resistance. Then we have this strong bullish movement. So it was from this zone. So from this zone, we have this strong buyers movement here. So this is a strong buyers area. But the market has gone up and stretched so far before it finally reached the level. When it finally reached the level, a few buyers enter, which means that the buyers are exhausted. That is why sellers keep going down. But when the price reach this level, look at this rejection point. Then look at this candle here, which means that we can also draw our support right here. So this support here is this rejection here that indicates sellers entered. It was a resistance. This rejection is a resistance. This is a support, right? Because this is support where the buyers enter. But this one, this is a resistance. Resistance where sellers entered. I'm talking about this rejection. Sellers entered. That indicates resistance. Okay? That indicates resistance. But if you check on the left side, there was a support which indicate the buyers entered. So this is a crossover. Okay? So from here, we have this gap up. The buyers keep pushing the price down. Okay? So when the price keep going down, they have a strong buyers movement here. Also, this is a resistance. This candle here, this rejection also is a resistance because sellers entered, but the buyers push the price upward. That is why we're having this rejection. Then we have this strong bullish movement. So the strong bias area started from here. Market made some correction, also find the buyer's entry level, then buyers keep pushing the price upward. So that indicate that if the market reach this level where the buyers enter very strongly, we can expect at least some buyer's entry. Okay, the candle almost touched the buyer's area but does not reach the buyer's area. But here you can see once the sellers are very weak, that is where the market will now start entering, the buyers will now start entering the market. This indicate that there's some strong buyers movement here. But assuming that the market just go up and drop down immediately, buyers will enter very strongly, even though sellers are very strong. But here you can see the market went up, play around, move horizontal, move sideways, play around, then come back to visit the level once again. Then we now have this sellers movement. Before you know, the market form a hammer, candlestick, and now the price is going up. So you can see this red candle here. Look at this area here. This is a very strong bias area. Okay, so which means that where the market is now here, that we have a strong bias area. So if this candle now close inside the strong bias area, we can expect at least some bias entry. Now watch, even though this candle close as a Marubozu, no rejection, we can expect at least bias entry. Okay, now we are having rejection. You can see rejection. So which means I'm going to adjust where the market is rejecting this low first, this low and this low is where the market is rejecting. Okay, so which means that as the market is going down, then we have buyers decided to enter here but fail. Then the market entered again, sellers entered again, buyers decided to enter here but did not fail. Then the candle closed as a reversal, which indicate that if the market come back again, we are expecting a rejection from this level, and after rejection, I think we expect the buyer's entry to enter the market. You can see. So okay, almost touched the level. It has not touched the level. What we need is the market to go more down. Now watch, once the price touch this line or maybe cross this line a little bit, it will reject. This candle did not close there, almost touch the line but did not reject. Okay, almost, but did not, but reject. But this one, once the price touch this line, it will reject. Watch closely. Okay, because of this candle here, because of this type of candle, I expect sellers to go more down. This is selling pressure. Okay, I expect sellers to go more down to reach this level. As sellers are going down, going down, watch almost a little bit more, a little bit more. Yeah, you can see we might, now you're going to see some rejection. You can see some rejections from buyers. You can see some rejection from buyers. Now we can expect buyer's entry. Okay, we can expect that buyer's entry. But before we expect buyer's entry, let's see how this candle will close. Okay, cross the two line, going to the lowest area. Okay, we can expect some buyer's entry. We can expect some buyer's entry on the next candle. We can expect some buyer's entry on the next candle. Let's wait and see. Okay, now we see the buyers enter the market. So where should you expect sellers to enter? Sometimes the market will enter a bullish candle, the next one will form a red, or sometimes the market will still continue. Where can we expect sellers to enter the market? Look for the origin of this rejection. This rejection showing the strong selling pressure. So look for the origin of the rejection. The origin of the rejection started from here. Let's say I place the line here, trace it to the left side. We have some level rejection, the rejection to be a support level. And I think the rejection started from here. Okay. And this side, I think this is the actual line the sellers enter the market. So that is where the rejection is from. So which means that if the buyers are able to push the price to this level, we can expect some sellers entry, which means that this is the next sellers area. Okay, this is buyers area, even though the candle close inside these two lines or close below these two lines or close above one line, something like that, buyer will still enter because this whole area is buyers area. The next sellers area is here. So which means that the buyers reach this level, we can expect sellers entry unless the sellers are not strong enough to push the price down. The market will continue moving up, but at least we can expect some sellers entry here. Okay. Okay, so now the market has created bottom double bottom and a bullish engulfing from buyers area. Where the sellers entered, this is the area we expect some sellers entry. Okay, let's see how the market is going to continue. As a supply and demand zone, I can now draw my demand zone here. Okay, I can draw my demand zone here. Okay, that indicate the market is going to continue to the upside. Some rejections are a Marubozu candle. The next candle rejects. I think the buyer should enter. Trying to find something here. This is advanced technical analysis, so it's not like simple like drawing support and resistance. Okay, so I'm going to remove this horizontal line, but we already know this is a bias area. Okay, okay, so we already know this is a bias area. So we can expect bias entry. The Marbozu, no rejection. That is why sellers entered here, but it's still at the bias area. So the reason why I draw this line is because I'm expecting the market to violate this line. Once the buyers break this line, it will continue to the upside. Once buyers break the line, the upper line will continue. Why did I say once buyers break the line? Look at on the left side, we have rejections from sellers, also have rejection from sellers. So which means that sellers are here. When the candle now break the rejection area, we now have sellers entry. So which means that if the buyers break this rejection line, the market might continue because from this rejection line to this lower rejection line is the buyer's area. So if the buyer should enter the market to move push the price up, it must get out from this zone, okay? Get out from this trap to continue to try support. But sometimes the market might still go more up to create another low before it reverts to the upside. Okay, now you see the market has break the upper line, which I'm talking about. That is why the next candle form a green candle. Now we see that the candle reject a strong rejection from sellers. Expect the sellers enter on the next candle. But there's a gap. There's a gap. There's a gap. There's a gap. You can see there's a gap down. But this is seller's area. Okay, which means that if you want to be trading like that, once you analyze the market like that, once the price reach this area, you place put option. Even though the candle doesn't close as red, you place put option. Okay, and the next time the market reach the level, you place put option again. You can see, despite the gap, sellers still trying to enter the market despite the gap, which means that this is a strong sellers area. Now I'm going to watch me now. I'm going to move this line to where I expect buyers to enter very strongly. This line, this high, okay, because the buyers break this high, then the market reject, okay, to this low. Now we can expect buyer's entry, okay. We can expect buyer's entry because the candle break below or close below this line. Then below this line, we're having some strong buying pressure. So from this line to this line is where I expect buyer's entry. But the candle closed inside. Okay, there wasn't any rejection. There wasn't any rejection. No rejection. A few buyer's entry, but no rejection. The sellers is going down. Remember, this whole area is still buyer's area. Wait for this candle to close. Even though it closed below this line, buyers will still enter. That is why we are having this rejection because it's still a buyer's area. Okay, I think now we can expect buyer's entry. Okay, so the kind of buyer's entry which I expect is to go more up, maybe test this area once again, reject, close as red or rejection, then continue. Maybe this time the market will change direction to the upside. Okay, I think there wasn't any buyer's entry. I think now the market, the sellers are very strong. Okay, from here, buyers entered from this level to this level. There is a strong buyer's entry from here. Okay, so from here now we can expect some buyer's entry, which indicates if the buyers are able to break this line, we can now expect buyer's entry to go more up. So this is how you analyze the market. Sometimes my analysis is wrong despite even trading, but I already know where the market will touch and where the market is going to reverse. That is one thing about trading in advanced way. if you know where the market will touch or know where the market is going to reverse, okay, you can predict the market with ease. Okay, I know the market is going to touch this level, and I know that this kind of movement will occur. But because of this bias area, I think there wasn't any bias entry. The sellers are still entering the market, the sellers are still going down. So if the sellers is going down, they would like to anticipate a strong or the origin of the bias area. Okay, they would like to anticipate this bias entry point and this bias entry point, this bias entry point and this bias entry point. They would like to anticipate the level. So I think that is why the bias is entering the market now. Okay, buyers violate this low. Buyers violate this low. Okay, so we having support one, support two, support three, support four. Let's say support three. Okay, and if we have the break of this line, the market will go up. Okay, the market touched the major zone here, which is right here. Okay, so let's see what is going to happen. So before that, let's check more example. Now, how do you trade support and resistance using candlestick pattern, like bullish engulfing, bearish engulfing? I'm going to talk about this because I don't want to talk about how to trade support and resistance using the candlestick pattern in within or for 3 days, because I just want to make sure that I talk about support, resistance, supply and demand, candlestick pattern before I now move how to trade this candlestick pattern. But it seemed to be that I want to mention that in this analysis. So we are having multiple rejection here. Also, we are having multiple rejection, which means that the rejection begins here and it stopped there. Then this is where the buyers entered very strongly. That is why we have this huge rejection. So with this huge rejection from buyers, I can expect we can expect a buyer's entry on the next candle. Let's check Euro GBP. On the left side, there's nothing on the left side. Let's see what we're going to do here. Okay, this is a resistance. Okay, it become a support, which means that these two lines is where we expect buyer's entry. Once the candle close there, we can expect buyer's entry. I think the buyers are struggling to enter the market here, but it definitely, let's see the buyers we entered. Okay, I think this is a reversal candlestick, a spinning top candle. We can expect buyer's entry. Here you can see sellers entry enter very strongly. Only few buyers entry here from the demand from the buyers area, but there wasn't any buyers entry here. Okay, the market is going up, it's going down because of this level. Okay, the market has violated all the support area and now it's going down. This kind of movement, if you want to know where you can anticipate this kind of movement, look for the origin of this one, but that is not there. Okay, we can't go much further. The market is now ready to form a trendy movement. Okay, and now the market visit the level. Okay, after this candle, The next candle should be green. I think you can see a spinning top buyer centered. After this candle, the next candle should be green. And this candle close below the line, the two line which I've drawn. A Marubozu, or let's say a close Marubozu. Okay, it closed below, so I think buyer should enter for 1 minute. Let's check another example. No, there's nothing to draw here. But let's see what happened here. That's the support area. Then candle close below and a doji candlestick. I think that is a false breakout, a fake breakout. You can see buyer centered here, and this zone now become a resistance. The market visit the level again. If candle close with a rejection, we can expect buyer's entry. This is a false breakout. Okay, a false breakout, the buyer centered. Let's see one more example. Wow, don't trade like in this kind of market. Okay, if you want to trade support and resistance, clean support and resistance, always use a trendy market. Don't trade whenever you're having multiple rejection like this. Okay, because sometimes this rejection will not work perfectly, or you might be confused when you want to draw your support or resistance. You might be confused, so it's better for you to avoid this kind of market. Okay, and there are so many gap. There are so many gap, but this gap you can use it to draw your resistance, support, and resistance. Something like this. This gap indicate that bias is here. Okay, and this gap indicate that buyer center from here. The sellers entered. Okay, so if the buyers break it, it becomes support. The buyers break it becomes support. So if you want to trade a put option, wait for the market to come down, then come back again. Okay, that is how you trade. So because of the first breakout, market is going up, and here a rejection and no huge rejection. Okay, candle close below, and it become okay rejection from sellers. So the next level is here. Expect the market to reverse from this level. SCUSD SGD. Okay. Um. So that is how you trade support and resistance in advanced way. You can see this one is not the one I'm drawing a support area and resistance area. But in advanced way, it's kind of complicated. So in case of you guys are still struggling to trade the simplest one, you can learn how to trade this advanced one. So advanced is when you have already mastered to draw zone. Okay. Sometimes I don't need to draw two lines. Just need to draw one line. So which means that sometimes I want to expect seller's entry here right here, but I must check where I can expect seller's entry. Okay. So which means that after this candle close, we can expect seller's entry. I'm using one line. Okay. Let me show you the reason why I use this one line here. Look on the left side. Look on the, you can see sellers enter even buyers did not enter. Look on the left side here. See this rejection. That is where buyers entered. Then sellers fill the gap, which means that any candle or any price that's above this line, sellers will enter. First, it reverse. First, rejection. Second, then rejection, and then now. But if the market is too close, or maybe there's no strong sellers to the downside, then the market is too close. That is when the market will not even respect the zone anymore. Okay, but you can see the market close above the line, it's dropped down. Here, rejection, but only one seller's candle. But if there's multiple sellers candle, the market again visit the level, it will respect. But only one seller's candle, the market quickly form a green candle. So we can't expect buyers sellers to enter anymore. Okay, I think this is a strong candle. If one more sellers enter, then buyers again visit the level, the market will end reverse. So this one, I just need to remove the line. Let me use one line to draw the support and resistance. Okay, here, just one line. Okay, starting from here, cross the line, reverse, reject, reverse. This one no rejection, but still reverse. Cross the line, reverse. Now this candle has reached the level. We can expect a reversal. Okay, see Euro USD. Okay, I'm expecting reversal because GBP USD, because here cross the line, reverse, gap down, reject, reverse, reject. It's going to be a reverse. Okay, okay. The next candle will be okay. Form a green candle even before I mention it. You can see reverse. Okay, you can see reverse. And this one, before I even mention it, it form a green candle. You can see just one line. I don't need to draw two lines. So it's very simple. If you trade like that, 5 trades, then you have already make some profit. I think the market is not going down very much. Buyers again visit the level. I don't expect a reversal. Can see very strong reversal if when the price cross this line. When the price cross this line or reject, reverse. You also reverse. You also reverse. Okay. This one reverse for 1 minute. There's no need for me to draw the line. I've already see on the left side. There's no need for me to draw it. I've already seen it on the left side. But I'm seeing a rejection. Oh, there's a gap down. There's a gap down. But well, it's still a reverse. Okay, it's still a reverse. Okay, still a reverse. And from here. Okay. Now you might be wondering, where should I draw the line if I want to draw the line? Where will I draw the line? Okay, look on the left side. We have this rejection, but this is not where I draw the line. I choose this one. Okay, I choose this one because I'm seeing a rejection that reverse. So I just need another example. Okay, rejection. You can see it reverse. So it's very simple. It's very simple. You don't need to struggle. You can see again, candle reject, close inside, reject, a few sellers entry. And this one, very strong sellers entry. But this one, it managed to form a one more red candle. But this time, if there's no strong sellers entry, it will go more up. Okay. Let's see. Okay. Buyer should enter here. There's nothing there. Why? Okay. So buyer should enter here. I think the buyer now is entering the market. We already got the rejection here. Okay. So buyer should enter. Nope. Nothing, nothing, nothing. Here, buyer should enter here. The sellers should enter. You can see rejection. Okay. Okay. Buyers entered. Now the market is not going to reverse anymore to go more up. So this time, sellers should enter. Okay. After this candle, the next candle should be red. Yes, the next candle should be red. If there's no gap, there's no gap. The next candle should be red. This one, I don't think the market should reverse to go up. Okay, because the sellers are very weak. Okay, it reverse. Doesn't. Yeah, I think the market is reversing. We don't know yet. Let's see what, let the price close. This one I say it should not reverse, but I think the market decided wanted to reverse. But let's see when the once the price close. Okay, I think sellers are still active here, and here I know that the market is going to reverse. You can see it's very simple. So I think I should stop here for today. So tomorrow we're going to talk about supply and demand trading advanced, the advanced supply and demand trading. Okay, so I hope you guys enjoyed today's. Sorry, I hope you guys enjoy. So see you guys tomorrow, same time, 8 p.m. Get ready by 8 p.m. So not that we're going to start immediately by 8 p.m. I always want to make sure that you guys, but only few people attend. Some people even left. I think maybe because of the time zone. So maybe next course I will make it more suitable for everyone. Okay, because of the time zone, I see that some of you did not even attend. Okay, don't worry. Maybe next time I will find solution to that. Okay, so tomorrow, like I said, we are talking about supply and demand zone. I'm going to show you different techniques to draw supply and demand zone and to trade supply and demand zone. Very simple. Okay, so see you guys tomorrow. Good night. Have a nice day. Bye bye.
Good night. Very good.